Kenya races past Ethiopia to become East Africa's top economy, and China hints at more stimulus to combat job market stress. How prepared is Nigeria to navigate the shifting global tide? Good morning and welcome to another power-packed edition of Business Week. Big moves across the map this week. China rolls out fresh employment support amidst trade tensions. TikTok, social media tech platform, gets hit with a 530 million euro fine. And Ghana unveils a bold $5 billion Black Star national branding experience to revive its economy. At home here in Nigeria, the AFDB is backing Nigeria with a $650 million annual 5-year support facility, while MTN Nigeria bounces back with a 133.7 billion naira Q1 profit, reversing last year's loss. CEO Kyle Toriola joined Rotus Aduri to break it all down. Meanwhile, a panel of top Nigerian economists sat with Arise Exchange to assess Tinubu's reforms and where the economy is headed. And the IMF gears up for its first Middle East and North Africa conference in Cairo, and Citibank's Ebru Pakan shares sharp insights with the Atlantic Council. From shifting alliances to sectoral shocks, we've got your week in business fully decoded. So we are helping you catch up as always. I'm Rolake Akikubefilani. As always, we'll start with a look at global energy commodities, and Brent crude oil, they're down week on week by a whopping 7.8%. Now, several things going on in the global oil market this past week. First, we've also seen that OPEC has been incrementally releasing additional barrels onto the market. OPEC had, for the last 2 years, pulled back around 5 million barrels a day from global oil markets. Now, Saudi is very reluctant to agree to any new oil cuts, and Saudi represents about 40% of OPEC's oil output. So that could have significant implications for prices going forwards, continued downward pressure on prices. Now, some of that may be stemmed by the fact that the US is considering and talking about secondary sanctions on buyers of Iranian oil. Of course, the US pushing sanctions heavily against the Iranian government there. So that could help perhaps slow down the continued drop in oil prices, but not a very good end to the week for Brent. Same with WTI. Natural gas held up pretty neatly, up by 24.4% week on week, but RBOB gasoline, of course, petrol prices were also down on average globally by 4.27% in the last week. Let's take a look at global equities markets. Well, the all-share index on the Nigeria Stock Exchange ended the week on week change on a fairly positive note, up by 0.27% to close at 106,042.57 points at the close of trading on Friday. Over 18,000 deals there struck, pretty neat there, but volume up as well by 33.93% week on week. And the value of those deals was, however, down by 24.39% week on week. Equity capital market capitalization was at 0.27% up to close at 66.64 trillion naira. Let's take a look at stock markets elsewhere around the world. First in Africa, of course, not a fairly decent outlook for stock markets on the continent, the major ones. Of course, Johannesburg and Accra finished the week change on a positive note at 1.78% and 2.46% respectively. Nairobi in Kenya was down by 0.16%, and I'll be talking about Kenya a bit later on my top picks. And Morocco was up by 1.09%. Scooting over to the North American market, no surprises here because US jobs data showed an increase in March actually, or April figures showed an increase. So that created some positive sentiment on markets, with traders helping to prop up the market week on week for the Dow Jones Industrial Index by 3.46%. And the NASDAQ Tech Composite Index was also up week on week by 4.68%. Let's hope that jobs outlook in the US continues positively, because the Trump tariffs are weighing down on markets. Now, Kenya, as I mentioned, as part of my top picks, top story here, Kenya is set to overtake Ethiopia as East Africa's largest economy. Ethiopia was doing pretty well until the devaluation of the country's currency, the birr. So we're seeing a 50% fall in the value of the birr vis-a-vis the US dollar. And this has meant the dollar value of Ethiopia's GDP has actually slumped to around 100 $117 billion. Kenya is set to end this year, according to the IMF, at $132 billion, overtaking Ethiopia. Of course, if we look at the GDP rankings in Africa, the largest countries are South Africa, Algeria, Egypt, or South Africa, Egypt, Algeria in that order, and then Nigeria now in fourth place at about $188 billion in GDP. So we have fallen about 2 or 3 spots in a relatively short space of time. But Kenya has overtaken Ethiopia is also because Ethiopia has had to liberalize its exchange rate as part of a IMF and World Bank funding package. It hopes to tap into about $3.4 billion in IMF support and about $16 billion in World Bank support. So it has had to pursue some liberalization policies, and that has impacted the value of the Ethiopian birr. China is unveiling further support and stimulus packages for the economy amidst the global trade tensions with the US. Now, this comes on the back of quite a lot of challenges in the Chinese economy in the past year. The property market is still in crisis. We're seeing additional liquidity injections into that country's banking sector. And of course, some concerns around global demand, especially for commodities, given some of the issues in the country. And of course, the trade tensions with the US persist. We expect to see perhaps a bit of a softening in the strong rhetoric and stance on both sides, but time will tell. It's a story we keep following here on Business Week. Now, the AFDB has pledged $650 million annually to Nigeria over the next 5 years. As part of a support package to help in critical areas of the economy, such as agriculture, sustainable infrastructure, the green economy, and jobs creation. Now, the devil will, of course, be in the detail. We need to understand a bit more whether that will be in the form of concessionary loans, what type of support that is. But I guess this is good news for Nigeria. Also, when you take into the fact that Nigerian African Development Bank President Akinwumi Adesina, doctor, is in the final leg of his 2 5-year term, total of 10 years presidency of the African Development Bank. Ireland's Consumer Protection Commission, the DPC, has fined TikTok, social media platform, 530 million euros for apparently, allegedly, sending European user data to China and so breaching privacy rules. Now, the investigations took place in the period from about 2019 to 2022, and the Commission has said TikTok is in breach. TikTok, as the courts did say, is now in compliance. So this fine is essentially for a 2-year period from 2019. China has now said it's pursuing Project Clover, which is an initiative to store user data locally within Europe. But the Commission says the fine will still go ahead. China has said it will appeal this decision. Of course, there's growing concern, not just from the US, about how China uses consumer data through some of these technology platforms. And finally, Ghana has launched a $5 billion Black Star Experience initiative to boost its economy. It's part of a national branding initiative from President John Dramani of Ghana. And he's appointed an official to head that particular initiative, an experienced professional called Rex Ouma. Now, this is interesting because back in 2019, former President Nana Akufo-Addo launched the Year of Return. 2019 was 400 years since the end of the start of the slave trade. And of course, that initiative did attract a lot of tourists to Ghana in the years after it was launched. According to research, Ghana actually benefited from about $3 billion worth of tourism revenue during that period. So this is a follow-on branding, national branding exercise, if you like, around what we very know is one of the iconic parts of the Ghanaian flag, the Black Star, and of course its football team. And this is expected to contribute to boosting the country's economy in the coming years. Well, that's it for my top picks. Now let's take you to some of our top stories from around the world. We start in the US. The April jobs report showed that the US labor market remained resilient in the weeks after President Trump's Liberation Day reciprocal tariff announcements shook markets. The The U.S. economy added 177,000 non-farm payrolls in April, more than the 138,000 expected by economists. The unemployment rate held steady at 4.2%. In the U.S., President Trump on Friday issued his latest call for the U.S. Federal Reserve to lower interest rates following a better-than-expected jobs report for April. According to him, as the country is in a transition phase, he wrote in an exuberant Truth Social post minutes after the last non-farm payrolls data came out, and we quote, "Consumers have been waiting for years to see pricing come down. No inflation, the Fed should lower its rate." He wrote very bold words there, unsurprisingly bold words from President Trump. Well, the U.S. economy contracted in the first 3 months of 2025 on an import surge at the start of Trump's second term in office as he wages a potentially costly trade war. GDP, the sum of all the goods and services produced from January through March, fell at a 0.3% annualized pace, according to a Commerce Department report Wednesday, which was adjusted for seasonal factors and inflation. That was the first quarter of negative growth since the first quarter of 2022. U.S. tech giant Apple posted better than expected iPhone sales and top and bottom line results for its fiscal second quarter, which concluded on March 29. In its fiscal second quarter, Apple made $16 billion in revenue in the Greater China region compared to analyst projections of $16.8 billion. Apple's iPhone sales of $46.8 billion exceeded the $45.6 billion forecast and the $45.9 billion the company recorded in the second quarter of last year. Japan's central bank held its policy rate at 0.5% on Thursday for a second straight meeting as U.S. President Trump's tariffs weighed on the country's economic outlook. The move was in line with expectations of economists polled by Reuters. It comes at a time of heightened trade tensions as the U.S. pressures countries to sign business deals under threats of reciprocal tariffs. In its policy decision, the Bank of Japan highlighted that it will continue to raise its policy rate if the economy and price forecasts are realized. China has blamed a sharp shift in the global economy for the decline in manufacturing activity in the month of April, according to the official data that was released. Beijing retaliated with new 125% levies on U.S. imports, while the U.S. imposed punishing tariffs in April that have reached 145% on some Chinese goods. The National Bureau of Statistics reports that the Purchasing Managers Index dropped in April below the 50-point threshold that distinguishes growth from contraction. Now, in Africa, Ugandan President Yoweri Museveni says he had a productive meeting with representative of Elon Musk's Starlink as the satellite internet company explores launching operations in Uganda. A unit of SpaceX, Starlink, is expanding rapidly across Africa and was recently licensed in Somalia and Lesotho. Museveni welcomed the move, praising Starlink's promise of affordable internet access in remote areas. Ugandans have long complained about high costs and unreliable service, largely dominated by MTN and Airtel. It remains unclear whether Starlink has formally applied for a local license, but the Ugandan Communications Commission has also yet to comment on the company's regulatory status. Kenya's annual inflation rate rose to 4.1% in April, up from 3.6% the previous month. That's according to the Kenya National Bureau of Statistics. Month on month, prices increased by 0.3%. While inflation has been edging up since reaching a low of 2.7% in October, it remains well within the central bank's target of 2.5 to 7.5%. Earlier this month, the Central Bank of Kenya cut its policy interest rate to 10% in a surprise move aimed at boosting private sector lending. The decision marks the fifth consecutive rate cut as the country looks to spur economic growth and modest inflation pressures. The president of the African Development Bank, Dr. Akinwumi Adesina, has issued a sobering warning on Nigeria's economic trajectory, cautioning the country risks long-term stagnation unless it confronts its chronic infrastructure and power deficits head-on. In his keynote address delivered at the 20th anniversary dinner of Chapel Hill Denham in Lagos, Adesina painted the picture of a country full of potential but hampered by policy inaction and weak execution. The AFDB president stated, and we quote, "Without reliable power, Nigeria's economy will be locked in a never-ending slow growth trajectory without transformation. You cannot industrialize, you cannot compete, and you certainly cannot create jobs at scale if you don't have electricity. Nigerian billionaire Aliko Dangote has said that he was comfortable with the impact of former President Donald Trump's tariffs on his urea exports to the US, pointing out that the major rival, Algeria, had been hit with an even steeper levy. Trump had imposed a 14% tariff on imports from Nigeria, Africa's largest oil exporter, as part of sweeping trade measures introduced last month. Dangote, Africa's richest man, said he initially feared the tariff could hurt exports from Dangote Fertilizer, which began commercial operations in 2022. The 2.5 billion plant, located on 500 hectares of land in the Lekki Free Trade Zone, is the largest granulated urea fertilizer complex in Africa, with a production capacity of 3 million metric tons annually.